Hello everyone, welcome back to the Monopolistic Investor. And in this video, we'll go over what happened during the past week in finance. So first of all, today is the 7th of July and we'll go over Figma's recent IPO developments. So we got the S1 document now that it's publicly available, and we'll go over the most important metrics that I found. We'll also go over the new financial instrument that Robinhood has introduced. But first, I want to let everyone know that I have built my own market share API, which you can access in the link in the description below and also in the pinned comment. This is a very simple to use API which will give you the exact percentage measure of a stock market company that is publicly available. This is just estimated market share, but it's based on real data. You can check it out. Okay, so now let's go over the disclaimer. Remember guys, this isn't financial advice. Don't follow me blindly. Do your own research and consult with a financial advisor. Figma files for an IPO, and here are my thoughts as an Adobe shareholder. So, as you all know, Adobe is a 17% weighted position in my portfolio, and I'm pretty much down on it, like by something like 20%, maybe something more. I will show you later how my portfolio looks like. And of course, right after we got this announcement, the share price of Figma dropped. The share price of Adobe, dropped. And it dropped by 4%. And of course, investors are nervous, they are uncertain about the future. And well, I'm also one of them. I'm also worried about whether that will take market share from Adobe. But I will show you what exactly does Figma do that Adobe also does, but in a different way. So first of all, Figma is a platform for collaboration on projects. Here, on the first slide, you can see all the different positions of workers before Figma. They were sending each other those weird coded names of files like final template version 2 or all of that. And now Figma instead makes it easier than ever to collaborate in one file. You can see all those people in one web browser window, and that is what Figma is doing. So basically they are a SaaS company, as it's very trendy right now, a software as a service company. And here let's just see who their customers are really like. Let's zoom over here, and you can see here that their paid customers with more than $10,000 in annual recurring revenue, well, they have increased, as you can see, from 8,000 to 11,000, and paid customers with more than 100,000 in annual recurring revenue, well, they increased up to 1,031 from 701. And this is based on those quarters, as you can see here. You can see the retention rates are pretty well positioned. 120 to 130% is really good. And you can see here that their operating margin, while it was negative in 2023, it crept down even more in 2024 due to them investing heavily into AI. You can see their negative cash flow. And then now it's positive at 17%, and it was previously at 8%. So you can see that they have a jump to profitability, which I like. As an investor, I look for that. You can see also that they are generating free cash flow. Here it is marked in red. Okay, now let's look at a broader picture. Here you can see that the quarter which I looked at, which is, well, it was year ended December 31st, 2024. And then we had this really big loss in operations. So this is right around here. Somewhere here. Yes? Yes. Somewhere here. You can see all of those losses have accumulated here, those two positions. You can see here that they have tremendous operating expenses. As you can see, look, their research and development expenses have basically 10 times folded. So enormous expenses for them. It impacted their net income, as you can see, but oh, sorry, wait, I need to go back. But you know, what is it with this? But their long-term growth rate is more stable then, because they have more infrastructure, and that is important for investors, as we want certainty. All right, so now they're back to profitability, but now you can see some variable net income numbers here. Is it a problem? Well, I don't know. It's a bit too small of an amount to really know. How do they make money? Well, I mentioned that they do subscriptions. Here, there are a few tiers, as with any SaaS app these days. For the starter tier, you can have access to Figma Slides, Figma Buzz, and Figma Draw, as well as Figma Design. So basically, a Canva is similar to them in terms of Figma Slides, Figma Draw, and Figma Design. Other apps are more, differentiated than Canva, but for example, Adobe has something called Dreamwave, which is for the websites. So it's something to do with Figma sites as a competitive thing. But dev mode is unique to Figma. That is a really interesting thing. Actually, 30% of their customers are developers. So that is something to keep in mind. I even used it at some point, but that was for some experimenting. But maybe I will use it for something. Here you can see professional tier. You can see that it's unlimited files and projects, advanced dev mode inspection. And you can see the collab ranges from $3 to $20 a month. The organization, which includes the dev mode as well as the make and other tools, it ranges from $5 to $55 a month, and enterprise from $5 to $90 a month. And it's more advanced usage. You can see all the key features over here on the screen. What we can see here, well, it's basically how much on a percentage basis of their research and development, operating expenses, gross profit accounted for as a percentage of their revenue. And you can see here this quarter when they had a big loss from operations. You can see this number 505. Well, that is, look at this, what happened here. Research and development accounted for 302% of their total revenues. so really high. Sales and marketing 156%, general and administrative 124%. But that is a bit curious, Maybe there's a mistake. I'm not really sure. It may be something like that, because for me it seems like a bit curious as to why this number 124 is such a high one compared to others, because it's mainly for paying their employees. So I don't know why that is the case, but maybe we'll see some reviews in the future. Let's go over their competitive advantages. Because I'm an investor in Adobe, I need to see whether this tool, Figma, is of any danger to my investment. So we can see here that Figma is a browser-based platform, while Adobe is more focused on the downloadable apps. So for example, you have Adobe Rush, Adobe Express, Adobe Illustrator, Adobe Photoshop, you have the Premiere Pro and all of that. Those are downloadable apps. You need to use the Creative Cloud for access to them. But Figma has a different approach. Instead of giving users the ability to download their app on their computer directly, they are a browser-based platform, which means that they are far more accessible. Although right now Adobe also has some browser-based options, which I'm grateful for, because sometimes it is handy for removing a background, maybe something like that for some people. So right now they have transitioned Figma from a purely design tool to an entire product development platform. So you can see you have this FigJam, which is something for collaboration, thinking, post-it notes. It's handy for group chats and mind maps, all of that. Then you have Figma Slides. Well, it's basically PowerPoint or Google Slides. Figma Design, well, it's more advanced. It's for more, precision-based design. For example, Duolingo made some of its features in it, and it helps. You can visualize how it looks like on a device. You can design it like that. You have different options. It really helps. Figma Draw, well, it's more for rough sketches of something and then to turn them into more of a vector-based drawing. That is similar to Figma Design. Developer mode, well, it is for when you can actually see the code that your designs represent. So that is handy for developers, someone like me. Remember that when I make an application, I might be too lazy to make everything myself. Well, I want to drag and drop the interface and then copy the code. That is something that I can do. Then we go into shipping category, Figma sites. Well, it's similar to how maybe, I think it was Amazon Dreamwave, or it's similar to how Lovable works. Well, in a different way, but let me explain. Because you make your website and then you can directly, upload it on the internet. You get the shareable link. So it's similar to how Lovable does it. Lovable is this tool that makes it easy for you to experiment with some websites making using purely AI. And you get the shareable link and you can post it to your friends or whatever. And then we have Figma Buzz, which is a tool that makes it easier to collaborate and create different versions of their social media templates. Basically you send something on social media, you use Figma Buzz, because you can get different versions of the same thing, like different background or different text, so you can test it out. And I think this here, Figma Buzz, its main competitor, it's InDesign probably. Here you can also see that this is a Duolingo. World famous companies are using them. You can see here that they say. Mig Rice, Vice President of Design in Duolingo, says that Figma feels like a Duolingo tool, not just a design tool. We partner with marketing, product and engineering in Figma. It's hard to imagine working without it. And you can see here that this is, well, their Super Bowl ad thinking. And you can see that the small text that they use FigJam to brainstorm ideas. But we also see, I have also seen in other pages, on other pages of their S1 report that, for example, they are using their Figma design tool, this blue icon right here, Figma design, to make their English course, well, this Duolingo English test. We also have Stripe. Stripe, if you didn't know and lived under a rock, is something which makes my business easier. For example, when someone pays for my paid newsletter or my software, I get a payment via Stripe because it's really easy to implement in basically any app you create as a developer. And developers like Stripe, and Stripe likes Figma because Figma is their design platform. It powers every touchpoint at Stripe. With Figma, they can scale their design to create cohesive and impactful experiences. And Stripe created their first brand campaign. You can see this on this. From city billboards to digital ads in Figma design. And that is great. When you have those big companies such as Duolingo or Stripe using your product, it makes it more sticky. It makes it so that those companies are way less likely to leave, because they are used to it. And business to business relations, well, it's much more, slow and steady instead of directly to consumer, because consumers, well, they are unpredictable in my opinion. So we went over that. Now let's go their growth strategy and what they are focused on. Of course, they are maintaining their rapid and proven pace of product innovation. Because of them launching many different products, they have also focused on integrating AI functionality extensively across their platform. So something like Figma Make, or then to something more advanced like automation of roles, repetitive tasks in FigJam and Figma design, as well as other stuff. They have also improved their median load time for the largest files on their platform by approximately 45% in the year 2023, between 20 and 2025. Approximately 46% of their employees were in research and development as of March 31st, 2025. So you can see that they are taking a very investment level-headed approach to their company. So they want to invest as much as possible in their research so that they stay relevant. Converting new and existing users into paid customers. They believe that all companies should need to interact with their customers through software and other digital products to stay competitive. And what another way to make an app than with Figma? Well, design, not make. Design an app. Well, Netflix, for example, also uses them. So, they are offering also a free plan to students and educators. That is helping them. Why? Well, because as students learn to use their platform, they get used to it, and in the future they are more likely to choose them over something like maybe Adobe XD. But that is just my opinion. It may not happen. Growing within current customers, well, their user base grew organically as more people began to participate in the design and broader product development process. And While developers made up a large portion of their user base since the beginning, they knew that Figma wasn't fully meeting their needs, so the needs of their developers. So in response, they built dev mode. So as you can see, they're actively listening to their customers and seeing what goes wrong, and then they fix it or introduce a new feature. That is really good of a company. But the first sentence says, "We have focused on building a company for the long term since day one. We will keep investing in our platform across our key growth levers." So this isn't similar. Well, it is in some way similar to Amazon, but Amazon says that they're a company that is still on day one, while they said that they're away from day one. So maybe it has a different approach than Amazon. Now the key business metrics and performance. 76% of customers were using at least two products as of Q1 2025. 200 plus friends of Figma chapters globally, 650 plus events in 2024. Total addressable market based on their report is $33 billion. Well, in software design. Is it a huge number? Well, we'll see in the future. 30% of their developers, of their monthly active users, are developers as of Q1 2025. 250,000 plus community resources, including 10,000 plus plugins or widgets. So you can also sell and make your own Figma plugins. So you can see that this is part of their ecosystem, similar to how Text SA is building their live chat integrations. Well, they have third-party developers building them, but they own the marketplace. And also similar to how Chrome Web Store works. You build a Chrome extension and you earn money. Non-designer engagement 50% plus. Non-designer spending substantial time on design work. Of course, that's not all. Let's go over the financial highlights, because we as investors look at the net cash, free cash flow, all of that. Revenue 749 million positive. Revenue for the 3 months ended March 31st, $228 million. Net income, or in parentheses, loss per share, you can see that they had a loss of $3.74 on the year ended December 31st, 2024. That was when we had this huge drop, I think. Net income per share, we had 0.04 for the 3 months ended March 31st, 2025. So you can see there's a huge discrepancy between those two numbers, but at least it's in the positive side. So I'm happy about that. Cash flows from operating activities to 1,047.3 million. So that is 1 billion. Investment in Bitcoin ETF 69.5 million. I don't know why they would do that. I wouldn't do that. Key risks and challenges. Of course, any business has its risk. Otherwise, it wouldn't be a business. You can see that they have difficulty in forecasting future operating results, of course, technical debt and complexity from growth. Rapid growth and product expansion can lead to increased technical debt, impacting platform performance. Misuse and fraud, of course, credit card fraud can happen, bad debt, other losses also possible. Fluctuating operating results, of course, it is possible that the AI impact on cost structure and demand, well, it can impact their overall revenue or operating results, for example, their gross margins, all of that. Inability to manage future growth effectively, well, they can fail to scale improvements to systems, processes, and controls. Reliance on third-party licensed technology, including AI models. Now that is a very, very important thing to look at, because they are dependent on third parties for licensing their technology. while Adobe, for example, has their own model for generating AI images. Now, inability to continue licensing these technologies on reasonable terms or they become unreliable could harm product offerings and competitiveness, which could in fact even break their brand. So I did a simple discounted cash flow valuation. We don't have the share outstanding amount which will be offered in the IPO because it's still not binding, the document. It has blank spaces in place of the numbers which would show the number of shares offered to the public. But we can see that the estimated enterprise value based on a 20% revenue growth rate, which is not that bad, it says here $2,948.07 million. And we'll see whether that will happen, but then you have to divide that by the shares outstanding to get a fair value per share. But I don't know whether that is correct. We'll see in the future. Direct competition from Adobe, it comes from Adobe InDesign and Adobe XD, which are two programs that are operating on similar level as as Figma does. For example, InDesign is for vector graphics and XD, in a similar setting. Now, the second thing we will talk about is investing in OpenAI derivative instruments via Robinhood. This is called stock tokens. And for those of you who haven't heard about it, well, it's something different to what a normal stock is like. A stock is an equity in a business, so you own part of the business. But a stock token is some other financial vehicle. Instead of owning equity in a business, you own an item that lives on the blockchain that shows you the price swings of the asset that it represents. So you don't own Nvidia or Microsoft, you own something that tracks the price of them on the blockchain. And here we can see the news from Investopedia. Robinhood announced that they would give away small tokenized stakes in private companies OpenAI and SpaceX because, Robinhood has invested into them themselves. But OpenAI backlashed with a saying that it didn't endorse that. Federal regulations currently prohibit investors with assets and income below a specific threshold from investing in private companies. And Robinhood CEO Vlad Tenev argues tokenizing the equity of private companies will give everyday investors access to the outsized gains that can come from being an early investor in groundbreaking upstarts. So OpenAI and SpaceX, yes, but OpenAI said that these OpenAI tokens are not OpenAI equity. We did not partner with Robinhood. We are not involved in this and do not endorse it. The company urged investors to please be careful. Robinhood CEO responded in a post. While it is true, but they aren't technically equity, you can see the precise dynamics in our terms for those interested, the tokens effectively give retail investors exposure to these private assets. End quote. Separately, a spokesperson said that the tokens provide indirect exposure and are enabled by Robinhood's ownership stake in a special purpose vehicle. But you can see here, it's all a bit, unclear what is the legal structure behind it. And when I invest in something, I want to know that I own actually equity in a business and not some kind of derivative instrument which is dependent on a third party like Robinhood. CEO of SpaceX, Elon Musk, said that, well, he hasn't commented publicly on the stock tokens, but he did seize the opportunity to take a jab at OpenAI, with which he has sparred in the past. "Your equity is fake," Musk replied to the company's post. So if the stock tokens aren't equity, what are they? Well, I explained that, and you can see that is some on the blockchain equivalent of equity. They are trading on a blockchain rather than public exchanges. They can be stored in an investor's digital wallet, and because they are on-chain, they can be used in other decentralized finance activities like staking, which is when you lock in your tokens in exchange for rewards. That could be some part, that could be a bit revolutionary for some people. Okay guys, so that was the part of presentation. Now let's take a look at my portfolio and what is happening with it. As you can see here, my portfolio is currently up 8.4%. On the maximum term, it's up 17.8%. The past month, I am down 1.6%. The past 3 months, I'm up 18%. 1 week, I'm up 0.4% due to some random swings. Just to be clear, I'm not a short-term trader, I'm a long-term investor. You can see here, I'm significantly down on Adobe. I'm down 18% on them. My position is around 17% weighted of the portfolio. And my second largest position, Uber, is doing quite well, around 25%, 24% actually. Alphabet is doing quite fine. I'm basically flat on them. ASML is also a bit flat. Caterpillar, I'm almost 50% up on this company, and I really don't know whether I should own it still or not. I need to do much more deeper analysis on Caterpillar, but I will keep holding those companies, don't worry. I am a long-term investor and I certainly don't want to sell unnecessarily and interrupt the compounding. So guys, you can see here, those are all my companies. While I'm an investor, I will not invest right now, even though I have some money. As first of all, I am not yet 18 and I want to wait until I'm 18 to invest more money, because right now this is on my dad's account and I'm just only putting my money, because I don't want to then sell all of those stocks and buy them again with a larger amount on a different app, because, well, that would be too much of a hassle. So you don't have to look at me and not buy anything. It depends on you totally. This is just my situation. You don't have to take example from that. Do your own research, but if I had to guess which company could be the most undervalued, well, I could say Adobe or Google, but in my case, I would buy more Google or ASML right now. Why? Well, because they are still undervalued in my opinion. ASML for me has a fair value of $1,100 at least, and Uber, well, it has $200 for me, 222 exactly, but we'll see whether that will happen. Alphabet, somewhere around 300, so is undervalued. Those are just my estimates, do not take them as financial advice. And basically other ones I would just hold. So thank you